Hey all, so in the previous video we had understood about the options open interest. So in this video we are going to understand similarly about futures open interest, what exactly it is and how it is going to help us in our trading system. So let's try to first understand the definition of futures OI. So futures OI is basically the number of outstanding contracts which are not been settled in a particular expiry yet. So it is simple total number of open contracts which are not been settled in a particular expiry yet. And what type of contract is are they an option contract? No, the type of futures contracts which are open in a particular expiry. Buyer and seller opening a futures contract is futures open interest. So again, let's say I want to go ahead and buy Reliance's futures contract of this expiry, this month expiry. At the same time, you go ahead and want to sell the Reliance's futures contract of this particular expiry. So we meet, and that's how one open interest is created, because that contract hasn't been closed yet. For me, my buying open interest is still open, and for you, your sell contract is still open in the market. So that is the reason open interest, as simple as that, the open contracts in which the markets, the participants have put interest in. For each and every buyer, there has to be a seller standing. So same as options OI, even in futures OI, there should be, for every buyer, there should be a seller standing. Now let's say if I want to go ahead and buy let's say Infosys futures contract of this month, there should be a seller who is ready to sell Infosys futures contract. Only then our contracts will get open, and then only then the open interest will get created, right? Elsewhere it can't be the case wherein I am just placing buy buttons on my terminal and the order just goes in the computer system and stays over there forever, right? So for each and every buyer, even in futures, there has to be a seller standing. One buyer plus one seller creates one open interest, the open contracts. Now how we interpret this thing, which is the futures built up? Ultimately there are equal number of buyers and sellers, right? Now how it is going to help us and how we can interpret this data? So it is very simple. There are four types of built ups. First one is long built up, the other one is short built up, short covering and long unwinding move. So there are four types of built up basically. So now let's try to understand it one by one. So now talking about long built up. So what is long built up? So long built up is a type of built up wherein the price of the underlying goes up, the futures price goes up along with the open interest in futures going up. So in this scenario, what happens is basically the buyer is very dominant, wherein buyers are ready to buy even at a rising prices, and at the same case sellers are spectacle and they are selling at a rising prices as well. So that is the reason it is called as a long built up. So long built up is considered to be in favor of buyers. It is a pretty strong positive move. The other one is short built up. So short built up is basically where the price goes down of an instrument and the open interest goes up. So I would say in this case hardcore short selling is taking place, wherein the sellers are short selling it and creating the pressure on the instrument to move in the downwards direction. But at the same time there are some buyers as well who are buying it at the falling prices. And the other two types of built ups are short covering and long unwinding. So short covering is complete opposite move of short built up, wherein short covering is a temporary pause wherein the prices of instrument goes up but open interest unwinds. So in this scenario, whatever the short built ups were, they are unwinding their positions. So the participants who have short sold and particular futures contract, they are now unwinding their positions. They are profit booking there, I would say they are booking their profits. So in this case, if we see that the short built ups which were created, the participants who have short sold a particular futures contract, they are now unwinding their positions, and that is the reason which is leading to the upside in the price. So short covering again is a temporary pause which is opposite of short built up. Price goes up but open interest unwinds. So now talking about last, which is long unwinding. So long unwinding again is complete opposite of a long built up, wherein the price of underlying goes down and also the open interest unwinds. So wherein whatever the prices are having a dip on this particular long unwinding move, they are only due to the long positions getting unwinded. There are not so many fresh shorts which are getting added. So again, long unwinding move is a temporary pause which happens in against of long build-ups. So I would say the price dips which are happening, it is only happening due to the profit booking scenario of the long build-ups. Now the most important fact is where we are going to find out this build-ups in futures contract. Simple. At Quantsap we are providing you an one-stop solution for your futures and options trading. So all we need to do is just go on build-up, go on script and go on symbol, wherein you will get the details for each and every FNO instrument, and also you will get to see on what particular instrument what is the build-up that has been witnessed. Wherein L indicates long build-up. So you see I have filtered out the long script wherein all of the FNO scripts have witnessed positive price move along with the open interest going up. S indicates shorts wherein all of the FNOs where the price has gone down and open interest has gone up, only those would be highlighted. Further, long unwinding which is highlighted by LU, the price has gone down and also the open interest of futures has been going down of all these FNOs. Short covering is a temporary pause again wherein price of FNOs is going up but the open interest is unwinding. And also in build-up tool we will directly get to see the market breadth. Like on a particular day you will have a bias on market, like out of total FNOs, how much FNOs have witnessed a long build-up, how much FNOs have witnessed a long unwinding move, how much FNOs have witnessed a short, and SC is indicating a short covering move. So now looking at the market breadth, you can have a bias on market. Now let's say for a particular day if the market breadth is purely hinting of a positive move, let's say out of 155 plus FNOs, 130 FNOs are on the long side and only 20 or 30, 25 FNOs are on the short side. That gives you a sense that okay, there might be a positive day, because net the strength of the market's breadth is more towards on the positive side, and the vice versa. So now the futures data will also help us in identifying the strength of a particular instrument, wherein we can use the futures open interest historical in the build-up tool, which will tell us how the strength of the particular instrument is, wherein we have found out something like Ambuja Cement over here, wherein if we have a look from 8th of July, okay, even I would say from 2nd of June 2021 up till 15th of July 2021, Ambuja Cement has not witnessed a major fresh short build-up. Whatever the price dips were, they were only happening due to the long unwinding move. So which will tell us nothing but the strength of a particular instrument. Like let's say if you are also looking at Ambuja Cement on 13th of July 2021 when there was a small dip in price. So if we look at this graph, it will directly tell us that that dip is only due to the long unwinding move. So which is the temporary pause which has happened. There has been not a very fresh significant short build-ups over the recent times in Ambuja Cement. So that's how using futures open interest historical we can identify the strength of a particular instrument, like whether there are a lot of shorts getting added in a particular instrument or there are a lot of long build-ups who are in control in a particular instrument. So I would say that was it from this video, wherein we tried to understand what exactly futures OI is, the build-ups, and then we try to understand about the market breadth and also how we can check the strength of a particular instrument. So if you have liked the video, do with the subscribe button, do with the bell icon, so whenever we post something, you will receive a notification. Thank you.